Welcome to the Building Bite Podcast, a podcast for construction owners, contractors, and insurance professionals where you can hear from the experts about key tips to help you be successful. My name is Peter Duggan, President and CEO of Proactive, and I'm here with Mike Diercksen, Proactive Senior Innovation and Content Solutions Consultant, and our featured guest, Nils Sorenson, Innovative Insurance and Risk Management Customer Advocate at Gallagher. How you doing today, Nils?
Doing great. Thanks for having me.
Our pleasure. And Mike, how are you?
Doing great, Peter. Happy to have Nils on the show and excited to learn a little bit more about SDI from him.
Absolutely. And nobody better to learn about SDI from. So the topic here is demystifying subcontractor default insurance. Nils, you and I have been together probably since the mid-2000s, so I know your background. But for the audience's benefit, can you take us through your background and maybe get us to where you are now?
Absolutely. And thanks again for having me. I started with Zurich Construction in 2000 as part of a program that Zurich Construction actually created called the Associate Program, where you took college graduates from any background and you trained them on the basics of underwriting, loss control, actuarial, and claims. From there, I progressed through various underwriting roles throughout the company and eventually ending up after a brief stint overseas in London as the global product manager for Zurich for the SDI product. And then in 2014, I moved to Gallagher Construction, where I've been an insurance producer and a subject matter expert until today, working with various general contractors, trade contractors, developers and owners, public entities, really on the whole breadth of construction insurance exposures.
Okay, let's let the demystification begin. Nils, can you tell the audience what exactly is SDI, and in addition, maybe why it was created in the first place?
Yeah, absolutely. And I think we will figure out it's not as complicated as maybe sometimes it seems, or maybe some folks make it seem. But at its heart, the SDI is a first-party insurance product purchased by a general contractor. And this product has a sole purpose, and that's to protect the general contractor and upstream parties against subcontractor default exposure. And the genesis of this product really was a combined effort between insurance brokers, insurance executives, and even construction executives on creating a product that is truly an insurance tool that could provide a more efficient process for resolving subcontractor default issues, as opposed to not having insurance or payment or performance bonds.
Wow. Okay. So Nils, you mentioned that this collaborative effort, is this in place of surety bonds? Is this something you think is meant to eliminate surety bonds, or is there an opportunity for both the insurance product and the surety bonds to exist?
Yeah, that's a great question. So if we're looking at downstream subcontractor default exposure, the SDI product is a replacement for payment and performance bonds being supplied by subcontractors. And this is typically how you have the program structured, in addition to other payment and performance bond exposure, which is addressed for the general contractor's default exposure through a payment and performance bond. They're very distinct things. So SDI does not replace an upstream default exposure. It truly is for subcontractor default exposures for a general contractor.
Okay. So if I'm a general contractor and I'm looking to get into the SDI market as opposed to bonding, which I may have used in the past, what are some of the barriers that I might face? What are some of the transitions and things that I'd be looking out for?
So I think the main barrier that we see and we work with prospective SDI clients with quite a bit is really the amount of due diligence and performance requirements that are in place when it comes to managing subcontractor supply chains. And so there's a significant focus now more so than ever on a general contractor's ability to manage their projects, bid their projects, and then pre-qualify subcontractors and then execute on their projects. So that's maybe the biggest barrier that we see, but it's something that virtually all of the prospects we work with, we're able to address that and make all parties comfortable with that process. I think the other element is more perception than reality, is just a misunderstanding that, within a certain marketplace or within a certain general contractor pool, that owners won't fund the use of the insurance and they will be essentially uncompetitive. They're using a product such as this when their peers are not. We address that quite often because the overall pool of general contractors within the United States as well as Canada continues to significantly increase, where we're seeing general contractors every year take up the insurance more so than any that are dropping the insurance.
And I know, Nils, the product has evolved quite a bit over the time, and I want to go back maybe to the 2000 timeframe. When we last spoke, you sort of broke down the evolution into 3 periods, and I thought that'd be really nice for the audience. Can you walk us through maybe that first period, the early creation period, and what the product looked like then?
Yeah, of course. So it was 1995 when the first general contractor and soon a few general contractors really braved it and took on the initial role as the initial clients. And really, it was, as with any insurance product that is brand new, there were a lot of issues along the way. The policy wording was intentionally, let's say, general in many ways. And then the interaction with the Zurich folks, with the client, was very collaborative, trying to figure out where the product works, where it doesn't, and a significant amount of time dealing with owners and lenders on educating how the product works and really trying to convince those parties that it will work without any evidence that, there was actually going to be a true payment of claims and living up to the policy wording that was in place. And it was gradual in terms of the client uptick, but it reached a pretty good amount by the time 2000 rolled around.
Yeah, that's interesting. Thinking back to the mid 90s and going to that first owner, can you imagine saying, yeah, this product, what? New, brand new, and you want me to put it on my large project? But good on those people for being able to bring that innovation and convince the marketplace. Because look, SDI is a huge positive impact for the marketplace now. So good for those folks. The second period, Nils, that you spoke about is the evolution, right? So we've gotten past that early creation. Now the product starts to evolve. Tell us what you know about that.
Yeah, of course. So throughout the early 2000s, and then, kind of into the middle of the next decade, there was a substantial increase in users of the product. And at the same time, realization as there maybe a few defaults were starting to bubble up and there were some claims that were happening, that the policy wording needed to be tightened up and potentially an increase in the due diligence process that was happening with the loss control group as more general contractors entered into the market. At the same time, a realization, I think, within the overall industry, especially the surety industry, that this was a viable product, or people perceived it to be a viable product, and pretty staunch opposition and campaigning by the Surety Association against the product. And for those who were part of any of the AGC or ERMI events throughout 2000, there were some pretty heated moments and some pretty heated panels on that topic, as well as many publications and articles written on the internet as well. So by the time we got to 2010, there were over 100 users of the product, and it was a substantial portion of Zurich's construction book at that point in terms of written premium, the number of underwriters, and the number of loss control folks and claims folks that were dedicated to the product.
Yeah, interesting. And that's a nice marker so 2010, we're talking about 100. And I know now that number is around 300. Is that right, Nils?
If not over 400.
Wow.
So there's not a solid way to track these numbers because they're all represented by various brokers throughout the U.S. and Canada. And that number is increasing substantially every day.
Interesting. All right. So that sort of takes us into the current period. So we get through 2010. We've got 100 insured. The claims are starting to uptick. There's proof in the marketplace that the product works. Now we move into the current period. Tell us a little bit about that.
Yeah. So really, this is period where huge expansion in not only additional SDI users, but also SDI carriers. So we moved from one exclusive market with Zurich to now, including Zurich, a total of 7 markets by the time we reach 2020. And as part of that, we've seen significant revisions and I'll say honing in of policy language, of claim handling practices, but also some lessons learned from some significant claims that developed and were settled, many, with your assistance throughout this period. But enough of a track record, enough confidence from these 6 other insurance companies to essentially jump into the market and continue to evolve the product.
So, Nils, you mentioned the carriers expanding. We've gone from 1 with Subguard and Zurich to now 7, as you mentioned. How do you, as a broker, how do the brokers factor into this? We have a bigger market, right? And how do you feel that the brokers are playing a part?
It really was from going back over 20 years ago. I could say when Gallagher developed its SDI team that was led by and really created by Jim Barry-Tua, the brokers played an extremely pivotal role as really educators and as, let's say gospel spreaders, if you will, but explaining to not only prospective SDI users, but also owners, lenders. I was part of many of those meetings as well from an insurance company side. I'm part of many of those meetings now today of explaining what the product is, how it functions, and really to show what the options are. And that's really to the heart of what we're doing here, demystifying this whole process, because it was pretty amazing. You go into a meeting and folks would have meeting to meeting, 6 different interpretations of how the coverage worked, how it was presented to owners, what coverage it provided to owners and lenders, which coverage it didn't, and then how claims really are handled and paid out given experience. So I think what you see now today, really you have, I'll say 4 or more, maybe 4 or 5 brokers who have dedicated SDI teams. And this is really what they focus on exclusively. And the carriers realize that. And it's a huge support for the different carriers out there because they don't have the bandwidth to do the education process, to do the demystifying. So that's where the brokers play a pretty significant role.
Yeah, really living up to that title of a trusted advisor, right? The broker is that trusted advisor to the insured, giving them that valuable information, kind of helping them see the bigger picture and filling in where the gaps may appear. So with that said, as we have the brokers kind of helping bridge that gap, but we do have new players in the market. We've gone from 1 to 7 rather large insurance companies. In what ways are they different? I mean, is the market pretty uniform? Is it, everyone does the same thing, or are there unique qualities between the different carriers?
Well, I think one thing to realize is that of the 6 following carriers that are currently active today, they all have former members of the original Zurich SDI program team as part of those groups. So I think from a big picture perspective, the coverage is for the most part streamlined and the same. There are certain aspects and tweaks that each carrier has come up with, but you really are truly looking at a pretty simple policy form with a very simple coverage trigger and for the most part, similar terms and conditions. One variable is definitely limits available. Your ENR top 20 general contractors can have programs with limits in excess of $100 million, if not even higher for certain projects. And then you see appetite differences between the different carriers as well. Some always are looking for clients who have significant projects that need significant limits. Others are looking more niche markets where they're, can go in and get some market share within certain groups that maybe haven't used the product before. So it does vary quite a bit. But I think in many ways, we haven't seen things change dramatically with the structure of the program, save one I'll throw out, which is Berkshire Hathaway. Their structure is different than most, and it's more using a large deductible self-insured retention approach, larger than the others, and looking at your top 20 ENR general contractor opportunities.
And Nils, if I'm a general contractor and I'm listening, what kind of subcontractor volume do you think I need to be doing to enroll in these programs?
Well, that threshold has definitely dropped over the years. And so today, I would say the lowest level that we see are annual subcontract numbers, or you can even think of a 2-year subcontract volume of no less than $100 million. And that is true subcontract values rather than contract values. So the reason for that being the program is a large retention program. There's significant skin in the game on the general contractor's part. And the numbers and the equations with are comparing the cost of SDI to traditional payment and performance bonds really is lost if you start looking at sub volumes below that amount. But we really do have general contractors of all shapes and sizes at this point. And as long as that general contractor can display and has a track record of showing that they can manage and pre-qualify their subcontractors, there is appetite in the market given the competition for general contractors that probably never thought they would be able to get a program in years past.
And we're seeing that too. That's one of the trends is the marketplace is getting bigger and bigger and attracting some of those general contractors that are doing less volume. What other trends, Nils, are you seeing? And really, what's your outlook for the future of SDI?
I think some of the trends we're seeing, and this is a function of just the way that the construction market is developing historical claims. We are seeing focus from the SDI insurers on certain types of work, even occasionally restrictions of enrolling certain trades. Framing currently is an issue. Curtain wall has been a problem in the past, still is. And then your major trades. So as the construction projects start to get larger, but they've gotten much larger, you're looking at the size and scale of some of these subcontract packages and looking at pre-qualifying these subcontractors, and do they truly meet those pre-qualification standards when the values get so high? So there's a combination we see on large projects, a mixture really of payment and performance bonds for some of those larger trades, or some of those trades that are not authorized to be enrolled in someone's SDI program, as well as SDI coverage for the remainder of the subcontractors. The other evolution we're seeing, or really push, is the insurers are focused on pre-qualification more than they ever have. And I think as we went through kind of the 3 stages before, this was one of the biggest changes, where when the product was first created, I think there was the understanding that pre-qualification was important, but maybe not a true vetting by the loss control group, by the underwriting groups, of how well a general contractor was actually pre-qualifying their subs, especially from a financial perspective. That has changed dramatically now, where we're seeing many new SDI users in the market being requested during the pre-qualification of themselves by the insurers, having to complement what they do already with a third-party pre-qualification vendor, which there are many. That's probably where developing as quickly as the number of SDI insurers out there right now, to really help them fully understand the financial exposures that they have to their supply chain.
And I love that the insurance market drives better behavior and better risk control. I'll ask a question that my carrier clients will probably get mad at me for asking, but as pre-qualification gets better, does the pricing of SDI go down?
That's a great question. I would say that the structure definitely improves. Pricing is, and from my underwriting period on the carrier side, the quality of general contractor in terms of how they pre-qualify is paramount. And so, yes, it is an advantage. There is I'll say a flight to quality when it comes to especially new entrants in the market. And so, that pricing is one component, but really it's actually just, an acceptance into the product in general. That's important when you look at that. The good thing for the SDI world right now, or SDI users or potential users, of all the insurance products out there, it may be the softest. The carriers definitely don't want to hear that. But because of the competition and because of the relatively recent increase in competition, there are from a broker's perspective, there is the ability to negotiate preferred terms and structures. That all starts with the exposure from the general contractor's proven track record and ability to present how well they pre-qualify their subs and manage their jobs.
And a lot of folks are telling us, Nils, and certainly you're dialed in on this topic, with the post-pandemic boost that the market got, there is a risk for additional defaults coming up here in 22 and 23. Can you give us a little bit of your outlook? What do you see for those couple of years coming up in the future?
Yeah, absolutely. And this was proven out during our last uptick, or the last few upticks, really, following a decrease in construction activity. It's a challenge. Everybody went through extremely challenging times over the last couple of years, and especially last year. And I think from a contractor's perspective, if there's the ability to go out and win work, it's always challenging to kind of know when to say when. And the unique thing with SDI, unlike payment and performance bonds, because SDI is offered by multiple carriers, multiple projects where you don't have total transparency, there is the ability to essentially overfeed or oversupply subcontractors from multiple general contractors. So the systems that are in place now, the pre-qualification tools are helping with that, but the product does enable in some ways for subcontractors to do as much work as they want without the constraint of, their surety essentially deciding how much capacity they have from a bonding perspective. So there has to be extreme diligence on behalf of the general contractors, as they're enrolling work, and they're ensuring that they're not providing too much work out there, because that is the concern, as we just have low supply in terms of talented, skilled labor. And you have enormous amount of projects with thin margins, and it only takes, one job to really cause an impact. So yeah, we're reaching that point right now in the market.
Nils, you say all this, and it reminds me that while SDI has been around for 30 years or so, it's still a new product, and there's still an evolution that's happening. Compared to other insurance policies, it's relatively young, right? And so there is a maturation of that as we get new vendors, new carriers in that space, and realizing the different nuances involved in all that. So it's a nice reminder that, again, while this is a great product and this is something that is widely being used, it's still growing. So jumping in towards the end here, Nils, we do like to do some rapid fire questions like that, put you on your toes a little bit. And I wonder, how do you and Gallagher differentiate yourself in this marketplace? What's the secret sauce for Gallagher?
Well, I think besides our longevity and commitment to the product, going back to even before 2000, I think the main benefit we provide our clients is really communication and coordination and sharing of information. When we first started really committing ourselves to this product, educating clients, educating prospects, educating the entire construction industry, we started an annual summit that's still going on today, where we brought together all of our SDI clients along with prospective clients and really had them lead the process and share what's working, what's not, bringing in our surety experts within Gallagher to give them a feel of what's happening with the surety market and what are some ways they can improve their pre-qualification through the eyes of a surety, as well as other aspects of the group. So I think that's been a huge part. Our clients are very collaborative. They all, like all SDI users and all SDI brokers, they want to see this product continue and thrive. And so that's really where we've provided, I think, the strong support for our clients.
That's excellent. Yeah, the collaboration is always the key, trying to get everyone together. So then, Nils, as a broker, what keeps you up at night professionally? What's the thing that's haunting you in this equation?
I think even though we have quite a bit of capacity, it's less of an issue now worrying about the viability of the product. We have a lot of smart people involved from all of the carriers that are involved. I think what keeps me up at night is seeing significant increase in defaults, having issues where we have claims or default situations where we're not seeing the product perform in the way it should from a claims perspective, and then having your upstream parties, your developers and your owners and your lenders not have the faith and trust in the product. And so those are my main items. And it is a challenging time right now with the amount of stress that's on the subcontractor community, given the way we are in the market right now.
Well, that brings me to a great piece here then, Nils, because we always like to give our audience a takeaway. Something that, if I'm a GC, an owner, a carrier, if I'm listening to this, what is something I can do today? What is something I can start and tangibly start to do to improve myself in this process? Is there a takeaway you could give our audience?
Absolutely. It all starts, the product all evolves around pre-qualification. So I think that being able to pre-qualify your subcontractor community as best you can helps you just run your business better, as Peter said before. And so, my takeaway would be for anyone that is thinking or has thought about starting an SDI program, engage with the broker. They'll help you decide, where you're at, maybe where you need to improve, and then go through the due diligence process with the insurance carriers. The insurance carriers don't charge for that process, and they will provide extremely meaningful feedback in terms of, are you ready for SDI program now? Or what are the steps you need to take to get to that point? So I would encourage everyone to do that, because at a minimum, you'll get market leading expertise and feedback on how well you're pre-qualifying your subcontractors today.
And a takeaway, Nils, for our carrier listeners, what input might you provide to them?
I think the main input is continue to evolve the product in a positive way where it's valued by all parts of the construction industry. Continue to innovate and use technology where we're seeing to help de-risk subcontractor supply chains, and continue to provide the claim service and the loss control service that clients need, especially during difficult times, as we anticipate an increase in default activity.
Good tips, both on the contractor and carrier side. So, Nils, we'll lighten it up a tiny bit and ask a personal question. What's one thing people might be surprised to hear about you?
Especially people that have heard me sing recently would be very surprised. But I've actually performed in the Sydney Opera House. I have. It was within a group setting, but I think it's. I like to give people that without too much background, because they're pretty amazed.
Yeah, Mike and I are grinning ear to ear. That's a surprise. And we have a few other podcast guests that we need to hook you up with. We can do a whole quartet. This is going to be fabulous.
Yeah, not only the singing, but the iconic venue to go with it. That's really something.
Yeah, I don't know if you'd have many podcast listeners after that one comes out, but we'll see.
Who knows? We got to try to find out, right, Nils?
Yeah, good point. Yeah, good point.
Well, as we wrap this up, as Peter mentioned, we always like to ask our guests, this is the Building Bite. That is BIM insurance technology with the experts. Nils, you are the expert. So we do like to ask, what are you taking a bite out of today? I know you're a San Francisco guy. What's the local fare? What are you going to grab a bite out of today?
Oh, man. Well, we're just happy that the restaurants are still around, the ones that survive to actually take bites. I would go for, recommendation for anybody, Nick's Crispy Tacos, down on Polk Street. That's where I'm going to go to celebrate. It's an interesting time in our market. So that's my tip.
And Mike, you're heading out to San Francisco soon.
I'm heading
that was a little
there
selfish question, wasn't it?
Right. I wanted the inside perspective, right? I wanted to know where Nils was going to go. So yeah, I'll have to definitely give that a look.
Absolutely, we'll go out. I'll show you all the spots.
Perfect.
Nils, thank you so much for chatting with us today. If our listeners want to hook up with you, where might they find you?
So I think I've got all my details on LinkedIn if they'd like. That's usually the best spot. And send me a message, give me a call, and I'd be happy to talk any more about SDI or anything insurance related. So I'm happy to do it.
Thank you so much, Mike. Thank you, Nils. Thank you very much.
Thank you.
Thank you for having me. Appreciate it.
Thank you for listening to The Building Bite. This podcast has been brought to you by Proactive. Check us out on thebuildingbite.com, where you can subscribe to our newsletter and follow us on social media for all future The Building Bite news and updates. You can also find us on your favorite apps, including Apple and Google Podcasts, Spotify, Stitcher, TuneIn, and Amazon. If you have ideas for episode topics that we should cover on the show, or you know somebody who would be a perfect guest, let us know at connect@thebuildingbite.com.